Do you think that gold can be considered a viable investment alternative to paper currency?
Yeah, we're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola, so's See's candy. See's candy, if the dollar goes down 50%, we will be selling See's candy for double the present price. We'll be getting the same real price for See's candy. People will work the same number of minutes or hours per week in order to buy a pound or a 2-pound box of the candy. So we would much prefer some asset that is going to be useful, whether the currency is worth what it is today or 10% of what it is today, or whether people are using seashells in order to transact business, because people will go on eating and they'll go on drinking and doing various things, and their preferences will translate in real dollars into more or less the same economics for us. And we would not trade the ownership of those kind of assets for a hunk of yellow metal, which has very little real utility except for people who are looking to flee from the dollar and in our view really haven't thought through the consequences of what fleeing would where they should flee. Charlie?
Yeah, if you have the opportunities of Berkshire Hathaway, averaged out, gold is a dumb investment.
My dad was a huge gold enthusiast, so I sat around the dinner table. My two sisters are here too. They will testify to it. We sat around listening to the virtues of gold, and that was in, we'll say, 1940. And gold at that time was $35 an ounce, and we would have had some storage and insurance costs. And here it is, 65 years later, world wars, nuclear bombs, all kinds of things, and the compound rate from $35 to a little over $400, less those expenses, is not something that causes me to salivate. Number 14.
We can go beyond that, but certainly when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce, and gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1-year period, 5-year period, any asset can outperform another asset. Tulips.
Why don't you join me?
If you go on CNBC and say that bonds are kind of a poor investment, people don't get mad at you. You don't even hear from the Treasury. I mean, you can knock almost any investment, and people may get a little irritated. But when you talk about gold, and of course that says something about their motivations for ownership. They want people to agree with them. They want everybody to get so scared they run to a cave with gold. And caves might be a better investment than gold. I mean, at least they're not producing more caves all the time. So they want people to be as afraid as they are, because that's what's going to produce an increase in prices. Incidentally, they're right to be afraid of paper money. I mean, they have their basic premise that paper money around the world is going to get worth less and less and less over time is absolutely correct. But
you just disagree with the investment theory beyond that.
Yeah. Where they run from that, and they should run from it, is where, in my view, they make the mistake. But they have a correct basic premise.
What I absolutely love about Warren Buffett's content is that he gives a take that was relevant 100 years ago, it's relevant right now, and it's going to be relevant 100 years from now as well. And that is exactly why you should subscribe to this channel, is because we provide so much amazing content just like this, talking about the stock market, finance, and all of that, and we try to make every single video that will be relevant 100 years from now as it is relevant right now today. Thanks so much once again for checking out this video of income views. Remember to subscribe. If you can't subscribe, I cannot continue making videos just like this one for you. Also remember to click the like button and also comment as to what you think of this video and what else you would like to see in terms of personal finance, Warren Buffett content, and so much more, because we cover it all on this channel. Thank you so much for watching, everybody, and I will see you in the next video.